Welcome and congratulations to the first training video. I hope you're going to enjoy this and that I'm not going to bore you too much with the details that you already know. But please be patient. My mission is to try and deliver as much value as possible so that you know exactly how to do it in the fastest, most simple but effective way possible. Before you start selecting and implementing strategies to improve your profit, you need to determine what your current numbers are. This is a very important step, as you need to know where your business is now and where do you want to go. Otherwise, you will not know how successful the strategies was for increasing your profits. In this lesson, I will teach you how to calculate your 4 key numbers for maximizing your profit. Number 1, your average sales per month. Number 2, fixed cost. Number 3, your variable cost or cost of goods sold. And then the last one is your profit margins. If you already know these numbers, congratulations. If you don't, no problem. I will show you how, and if you have completed the following exercises, you will be ahead of most of the businesses out there. What's really surprising is that most businesses have no idea about their numbers. As we become more successful in our business and we get more busier, we lose focus. We stop doing the things that actually makes us successful in the first place. We're so focused on the operational side of the business that we forget to focus on a handful of simple but very important key success drivers. But here's the problem. You're not going to get this information from your year-end financial statements. And unfortunately, for most business owners, they are the only numbers they have to make business decisions. In short, the purpose of financial statements is to provide historical information to external decision makers, like bankers, for tax purposes, and outside investors. Your year-end financial statements are a general overview of how your business did, what happened last year, but can't tell you why. And as a business owner, it's your job to make decisions that will affect future profits in your business. This is extremely difficult, if not impossible, to do with limited and outdated information that is contained in your year-end financial statements. If you're using these statements to make important decisions for your business, you're probably wandering in the dark. In a nutshell, your year-end financial statements don't help much. You have to add up some of your own numbers to see if your business is taking you where you want to go. So, to get started, you need to measure only 3 simple important numbers every month for the next 90 days. This will allow you to give you a good average of what your current situation is. You can do this once a year unless something drastic happens in your business. In the meantime, you can start to analyze your cost, expenses, prices to identify some opportunities for improvement. I've included a little bonus for you. A simple Excel spreadsheet to help you calculate your cost, and I have added some extra external links with more information. So the first step is to calculate the average monthly sales or revenue or income for the month. You can just take the last 12 months sales and divide them by 12 to determine what is your average sales for the month. But you need to take in consideration how seasonal factors affect your average sales, and also if your business is growing or declining. The main idea is to determine what an average month's sales will look like in your current situation. So if sales are presently rising or falling, you want to use your latest numbers. I recommend that you stop the recording and complete this step first before going on to step number 2. If you have completed this step, it's time to move on to the next step. In this step, we're going to work out what is your fixed cost. Now you have to identify all your costs either as fixed or variable. Now your fixed cost will always remain constant, as you can see in the image above. They do not vary with your sales volume. These are the cost of keeping your doors open whether or not any product is sold or produced or a service is delivered. Fixed cost includes rent, utilities, insurance, salaries, phone bills, legal and accounting fees, marketing, advertising, auto, travel, internet connections, office supplies, repairs and maintenance, and all cost that's not directly related to the actual production or sales of a product or delivery of a service. And don't forget the small amounts that you sometimes take out of the business and forget about it, like snacks, coffee, lotto tickets, and the small things. You get the picture. These small amounts can add up to a good amount, and the idea is to get our numbers as accurate as possible. On the tool and the fixed expenses, you will find a spreadsheet that you can use to analyze your fixed cost. On the left hand side you can edit the items to suit your situation. On the right hand side you'll see there's 3 columns. The one is for your current expenses, the second one is the target expenses you're going for, and the last one is your actual expenses. At the bottom it will show you your total expenses, also how much you're saving, and your expenses per day. This tool will come in very handy, especially when you're trying to cut down on your fixed expenses. I recommend completing this step before going on to the next step. So the next step is to determine our variable cost. This is known as cost of goods sold, also known as cost of goods manufactured or cost of sales. Now it's very important to know your variable cost because this normally is your biggest expense. In general, if you're like majority of businesses out there, this cost will add up to about 75% of your total expenses, and a small saving or improvement of 1% in this area can have a huge increase of up to 75% in net profit. Now first you have to understand that the idea behind cost of goods sold is to measure all costs which are variable, directly associated with making or buying the product or delivering the service. Only businesses that buy, carry or sell inventory needs to calculate cost of goods sold. A manufacturing business needs to calculate the cost of goods manufactured. And in some rare cases, a manufacturing company also needs to calculate the cost of goods sold for the finished product. And lastly, a service company that needs to calculate the cost of sales. These are all variable costs because the cost varies with the number of units that you sell or produce. If you double your sales, your cost of goods will double. If sales is 0, your cost of goods is 0. This may include raw materials, inventory, direct labor, packaging, commission, freight, or to perform your service, you may include hourly rates, commission, travel, and various service-related costs. To calculate your variable cost, you can use a simple free tool that I've included. Under cost of goods sold, you'll find 2 calculators that will help you. The top one you will see is for retail and wholesale companies using cost of goods sold, and the bottom one is for manufacturing businesses that is using cost of goods manufactured. Let's start with the top one for cost of goods sold for retail and wholesalers. First you have to calculate your available inventory at the beginning of the month by doing a simple stock take. Next you have to add all the goods that was bought during the month. That will give you the total cost of goods available for sale. Next, you have to subtract the value of your ending inventory by just doing a stock take by the end of the month and just subtracting that from the cost of goods available. And that will give you the cost of goods sold for the month. Next, we look at the bottom calculator for cost of goods manufactured for manufacturing. First, you have to calculate all the cost of all the goods manufactured for the month. Next, you have to add the value of your opening goods inventory from your stock take that you did in the beginning of the month. Then you have to subtract the value of your closing goods inventory from the stock take that you did by the end of the month. And that will give you the total cost of goods sold for the month. If you are in manufacturing, I've included a second calculator. This calculator is for when you have to determine your cost of goods manufactured and your cost of goods sold. It explains itself and I hope it will help. Now that you have calculated your sales, your fixed and your variable cost, it's time to move on to the next video where you can download the management tool and start playing around with your numbers. The tool will work out the other 2 numbers that you need to increase your profits. This is where all the fun starts, to see how small changes can affect your business and your life. Thank you for watching the video. I hope I've been of some help. See you in the next video.